Okay, this is Pierre Ferrari, President and CEO of Heifer International. I'm just thrilled today to be able to welcome Jacqueline Novogratz, who I think many of you know is the founder of Acumen Fund. And without going into a lot of detail, because we don't have that much time, we're going to talk. Very, I think, in depth about impact investing, as well as her new book, which I was able to read this weekend, Manifesto for a Moral Revolution, Practices to Build a Better World. It was published this month in May. And the connection between that work, impact investing, the way it's approached, I think is going to be a fascinating subject for our conversation. So Jacqueline, welcome. I'm
Thank you,
thrilled to have you here. And I've got a couple of questions, and they're linked. So the first thing is, in this impact investing field, there's been an awful lot of discussion and debate and varying definitions of what impact is, right? We all know what investing is. Well, we all know, most of us know what investing is. And there's some fear that investing can be, very capitalistic and demanding and brutal, et cetera. That's not what we're doing. We're trying to do the opposite. We're trying to create a better world using investment approaches. So that's one thing. And then, and this is what your book is about, is how to link it to the moral imperative. What is being asked of us, of us as people? And I think most of our audience, we're trying to make a better world. So what is your moral imperative to do that relative to impact investing? Now I'm going to sit back and let you answer that.
Thanks, Pierre. And I know we actually only have a short time. So this is a conversation, as you know, that we could have for 2 hours. And
oh, yeah.
I have huge respect for Heifer and the journey you all have been on. And I think that part of, or what's inherent in the question is that when we think about impact and impact investing, there's a spectrum. And there are many who think that, look, any investment has impact, right? And of course the answer is right. But there's negative and there's positive. And the question I would ask is impact for whom and in service of what? And so when you think about the moral imperative for impact investors, I think we've got to change our definition of success, either from one that says, if I make an investment in Africa, for instance, and just assume that no matter what it is, it's an impact investment, that we actually dig much deeper and first look at how does it impact the most vulnerable? Can that be a part of my definition of success? And from whose perspective? At Acumen, we use lean data, which is a way of reaching out to the customers, the poor as customers. We ask their perspective. So when we invest in a company that provides solar electricity, we're not so interested just in how many people now have access to solar light, although that clearly is part of the impact. But on the positive side, what are the health implications? What are the education implications? What are the gender implications? What are the income implications? What is the carbon offset implications? And what are some of the negative impacts? What do we need to think about in terms of e-waste and the environmental damage that may or may not be done? And it requires a level of humility and curiosity to think about how we measure impact from the perspective of those we serve, not just the perspective of ourselves. But I think that when we flip it in that way from a moral imperative, then we have a much more interesting conversation and the learning is all that deeper.
So I understand, what you're saying. The conversation often goes when you talk to impact investors, and I've been to too many conferences on this, is what kind of return can you expect? Where does the moral imperative begin to have an influence on whether the investor's looking for 18% or 12% return or some kind, it's funny how the conversation, the vocabulary is always what I call Wall Street vocabulary.
Always. And I think it's because the things that we can measure, which is our financial impact. And there is something that I would say in my own personal journey, which started off not really sure. Was this, you had Warren Buffett saying the problem with impact investing is that it's like a houseboat. It's neither a house nor a boat. It's, mediocre. You had people that are real influencers in the world saying that holding these two purposes or these two goals of purpose and profit were incompatible. And one of the lowest points, I would say, which was a real turning point for me, Pierre, in building Acumen, was when we had, we have 3 for-profit funds in addition to the Patient Capital, which is our philanthropic impact fund. And we got in the final stages to see if we were being due diligenced by one of the largest development finance institutions in the world. And the woman asked me to fly to her country across an ocean to give me the answer, which I assumed would be a yes. And when I got there, she said, Jacqueline, I wanted to tell you this in person because I have so much respect for the work that Acumen does in building early stage companies with your patient capital. But at the end of the day, our investment committee decided that we couldn't take a bet on you in the for-profit sphere because, well, I don't know how to say this, except that you're not real investors. And I said,
real.
You're not real investors. And I said, help me understand what you mean by real investors. And she said, well, look at it this way. When the company is in trouble and you have to make a decision between protecting the poor and protecting your investors, particularly with you, Jacqueline, on the investment committee, our investment committee is worried that you will side with the poor. And it really took me back. And of course, I didn't have the answer right. What I said to her was, but isn't your mandate poverty? Aren't you taking taxpayers' money to eradicate poverty? But after, of course, that's when my brilliance came to me, was when I said, wait a minute, if real investing is getting to a place where your company is in trouble, then stripping assets, getting rid of jobs, and doing whatever it takes to all stakeholders except for your shareholders, not interested. If we could redefine real investing to take into account the impact of our work on all of the different stakeholders and still provide a fair return to our investors, might take a little longer. That is what interests me. And that was a fully new definitional moment for Acumen, Pierre, which then gave us the confidence to come out swinging, I would say, so that now we have more capital under management in our for-profit side than on the nonprofit side. But it's the values that can go across. But it took a long time to develop that confidence that if we are getting together at all these impact conferences and all we're talking about is financial returns, then it is to each of us that actually cares about impact to be the ones to ask, where is the impact? And that's where.
Yeah, no, that's, I just think about as you know, we've started impact investing about 3 years ago. I hired the first one. I hired David Norman, was somebody who had done some banking work, but also a lot of development work at Winrock. And so he understood this whole dilemma or dichotomy that could exist. And he was clearly on the side of the poor. Okay, that for him, it was not a question. Now, and he retired. He did a good job starting the whole thing off with us. And now we have just hired a different group, and we're going to be hiring and engaging people at the local level, the country level, or the regional level to do this kind of work. And of course, you have to understand the financial parts of it, right? You have to understand how to do cash flows and discounted cash flows and present values and all of the techniques that are so sophisticated in a way. Okay, but with that comes a lack of understanding on the moral issues, right? So I don't know whether you've had
Not necessarily, Pierre.
Not necessarily. I agree with that. I totally agree with that. But that's the search we're on now, is actually to say, okay, how do we populate a group of professionals who understand investing, but whose commitment, whose values, back to that, are actually about impact. So that, for example, we use this word pro-poor wealth creating value chains, right? Pro-poor. so that I keep saying it's
I know
like
what you mean.
whatever the investments that we make and the wealth that's created by
It's a preferential treatment of the poor.
is preferential treatment, so that there is a distribution of the wealth that's created that's not usually done by capitalists. They try to grab as much as possible, and that is from a practical point of view, or just a habit of thinking point of view, is something to overcome. So I'm just wondering how you actually found folks, or whether you trained the values in them. Did you send them to 12 years worth of Catholic schools like you and I did to actually have
I didn't do 12. No. In fact, thanks. God forbid. It's actually why I think what we need to do with our in our schools, in our companies, is teach all of us to get better at holding values in tension. That we are not going to solve our problems simply with our hearts, nor with our heads. But I have found that most human beings hold both inside and make really hard decisions. But there's somehow, when they're within a system where they feel rewarded based on one metric versus another, they will lean that way. And what we all have to do is create more ambidexterity, if you will, in ourselves. I don't have to train. I've met some of the most soft-hearted capitalists who understand how to use the tools and are a little sickened by what is either being done or what they have become.
Mm-hmm.
And
what they have become, right?
And on the same side, I've seen people working fully in the charitable sector who feel the same, that they feel disheartened by the level of dependency that they're seeing all around them. And so I'm actually finding a willingness of a new generation to hold these tensions as uncomfortable as they are. Acumen writes off investments. We have helped dismantle companies. It's painful. The alternative is to throw good money after bad, and everybody loses. And so it's not that patient capital is stupid capital. It's we never lose focus on what we are here to do. And then we try to stand on a moral compass that equally holds with rigor the financial imperative and the social imperative, knowing that we'll make mistakes, but no one will ever say we didn't try. Mm-hmm. And now, 20 years later, like with Heifer, we've got the results. We've got companies that have brought light to 300 to 100 million people. We've got a company that has transformed the chicken sector in Ethiopia.
Yeah.
But those are successes I talk about. Some of the successes that make me proudest are when teams in Latin America are working with associations of farmers that lived completely without trust, skills, capital, access, infrastructure for 50 years during the Civil War. Expecting them to know how to actually build a company that will provide you a return, not in the short term, but you can structure capital if you see it as a means to another end, so that long term they can get better at it, building assets, building wealth, in your language, of pro-poor wealth accumulation.
Yeah.
To me, that is deep impact. It doesn't scale very easily, but you can create a portfolio. You can't.
So I'm wondering I think this whole issue of scale is interesting. We, as you know, Heifer was built basically on philanthropy, right? We were incredibly successful at raising.
And one of the few that really scaled.
Yeah, and we're the ones to fuse scale. But now there is no question that one of the big trends we all have to face in the NGO world is that philanthropy is starting to go down, and the interest in development funding is declining. Not very rapidly, but it's declining. So we took a decision about 3 or 4 years ago that capital, right? That we were going to use impact investing as the principal tool with which to build the pro-poor wealth creating value chain, and not philanthropy, and use philanthropy in a different way. In the conversation I had with Morgan Simon earlier this month, or a few weeks ago, I asked her the question, what's philanthropy for? And I'm going to ask you the same question. I sort of warned you a little bit I would do that when we talk, but
yeah. And it's interesting that you went. I would imagine, just in the few times we had real conversations, Pierre, that it wasn't just about philanthropy drying up. I think we're going to see a resurgence of crowd-funded philanthropy as the world becomes
good. I hope so. Yeah.
Cognizant. I do.
Yeah.
I do. I would hope that move was also because, again, we're having the wrong conversations to see philanthropy as one big bludgeon and the markets as another big bludgeon.
Yeah.
I see philanthropy as opposed to charity as the most risk capable capital that we have. So charity I see for emergencies like we're having right now with COVID. Charity I see for real immediate relief of suffering. We need that. We'll always need that.
Right.
Philanthropy can be much more strategic. Philanthropy can be the private capital that we have that we can put in service of public good. And when you think of it that way, there are so many different ways to use that philanthropy to enable people to solve their own problems.
Mm-hmm.
But to me, if you think of the root of philanthropy, which is really about love for others, that kind of philanthropy, which is strategic, other focused, and enabling, that is powerful stuff. And so we use philanthropy at Acumen to back our patient capital and allow us to make these early stage investments that nobody else will make. We use it to accompany our companies like the ones working in post-conflict, where capital by itself is not enough, where we actually have to walk with entrepreneurs and their employees, help build their capabilities so that they can actually make use of the capital.
So in the way you use philanthropy is the way you described it. There's no expectations of the not financial return, but necessarily capital return, or not?
It depends for us. The most risk-oriented capital that we have. So we use it, Acumen uses it in three ways. One, we use it to back our patient capital investments, where we hope over the course of a 10 to 15 year period to get the money back on a one-to-one basis that we have invested.
Yeah.
That does not cover all of the costs of accompanying the entrepreneurs and the employees.
Yeah.
So we also use philanthropy to provide that enabling grease, if you will, so that it's not just about the financial capital that we invest, it's about the human capital that we build.
Yeah.
And then third, we have a whole leadership arm of Acumen, a social university, if you will, that is fueled by philanthropy. And we are building in financial sustainability, but that might take a while.
No. So we use philanthropy now mostly for community development purposes, to actually mobilize the farmers to do what they would like to do. And we give them ideas, obviously, and we train them, we elevate their skill sets, everything else. That's the principal use. And one of the ways we sort of describing this use of philanthropy is advocacy. We're actually advocating with the communities, because we work, as you know, with very far-flung rural communities, and a lot of the psychosocial situations that these communities are, in a way, clinically depressed. You know, they've given up multi-generational poverty, and they simply don't see a way out. So we have to transform them, much like Alcoholics Anonymous transforms people from being completely dependent on their addiction to somebody who says, I'm gonna fix it. I'm going to fix this, right?
And that's where the principle of accompaniment is so powerful, Pierre, for me, because, well, first of all, we have wounded people, we have wounded communities. I think every one of us has,
every one of us, yeah, sure.
has wounds. And so we're at this moment where we want such simplistic solutions to our problems, silver bullets, linear fixes.
Yeah.
And what I have found is a much more radical idea is to see a human being, a community for their fullness of what it means to be human, the things that get in their way as well as their capabilities. One of the real fallacies in impact investing is that, build it and they will come. Give them access. And then you're like, oh, these people, they don't understand how to build this. It's like, well, if someone's told you your whole life that you're worthless, sometimes it takes a while to get to a point where you actually believe you can do something. And frankly, I think every single one of us can relate to that at some level. The idea of accompaniment, and this is where I think what you do is so exciting to me on the philanthropic side, is to recognize that unless we give people the capability to use access, to enable that access, they won't get the kind of freedom that access to markets actually does allow.
Yeah.
And we got to do that work. And that actually is the hard work.
So it is hard work. But I'm always, and some of the stories in your book are very inspiring, and it's just always, every one of the stories seem to have come from the energy of the particular participants that you describe, actually taking charge of their lives, right? Becoming self-reliant and accountable to themselves and their community, and just doing it. And that is just wonderful. There's a bunch of questions, and I'm gonna, sorry to all those who wrote in, I appreciate it, but let me just ask one question that's really relevant. It's the role of the Fortune 100 or the Fortune 500, and the role of private sector. As you know, sustainability is a very large, this is a question, sustainability is a large movement within Fortune 100 companies in the US as well as Europe that includes definition even for human sustainable. Now, we did start with environmental sustainable, but how do we engage those business professionals with titles such as VP of Director of Sustainability and all those departments that have grown up, and some of them end up in procurement, some of them end up with a chief executive officer. How do we engage those folks in impact investing the way we're describing it? Are they able, in your opinion, your experience, to actually transition and understand that impact is primary?
Yes. And the book is really clear about the reason I wrote this book is because I really do believe that change is the domain of all of us, and that we have to learn how to partner, because we all talk, whether we're corporations or we're social enterprises or impact investors, we all talk about the importance of inclusive supply chains. We all believe that.
Right.
I've not met a corporate CEO that doesn't believe in inclusive supply chains. And yet it's really hard to do. And so I would say that some of the most morally courageous individuals I've met actually have been middle managers at corporations who feel terribly isolated because at the end of the day, they're still being judged by their profit and loss statement.
Yeah.
And so I wouldn't look at corporations as monoliths because they're too complex, but find an individual within the corporation that's on the journey, that wants to make change. We have we've had a partner at Hershey Chocolate. Chocolate is a hard industry. It's an ugly industry. Where you guys work at chocolate. 90% of the farmers make under $2 a day. We're all part of it. None of us are pure if we eat chocolate, which I do every day. And it would be really easy for me to say only buy beautiful, sustainable chocolate. Well, that'll set you back about $12 a chocolate bar. And so we got to fix this. And it's all of our problem. What's been really heartening, and I don't have any fancy stories. I have all the fancy stories are of the social entrepreneurs and the impact investors that are working in the premium cocoa. Mm-hmm. But there's a bigger story if we have the courage to partner with the right corporations to help them disentangle the complexity of governments that set the price, and that needs changing, of the corporate supply chains and how they move across the corporation. And I think that if we enter partnerships with humility and our own vulnerability of what we're good at and what we're not, and audacity to say, this is what we're going to build together, and we stay there long enough, I've seen real examples of corporations partnering with us, with our corporations, that have not just been transformative for the investment, but for us as who we are and what our understanding of what could be is. And that's, I think, the secret of revolution.
I love your optimism. I'm afraid I've shifted too much into cynicism about some of these global value chains and supply chains. But I do think you're right. There is an opportunity, and there clearly, our experience is there are clearly some individuals who really want to make some change, within these corporations, senior people. And then you get down to the procurement folks, at the field, and then you say, well, how do you make more money at your job? I said, I'd get a lower price. Got to get a lower price.
And that was my, I'm optimistic, but I had a lot of lies on my face, Pierre. That comes from betrayal, corruption, depression, getting the rug pulled out.
Action, yeah.
When we started looking at partnering with corporations, I think, like you said, I certainly was too excited by what the CEO said. Turning around a battleship is really hard.
Yeah.
And that's why I say now, yes, you need a CEO that actually at some level buys what you're doing. You need a change agent inside. And you've got to help that change agent figure out how to navigate. But if you're not ready to go the gray, you're just going to be, you're going to lose every time. So I would call myself a hard-edged, stubborn optimist. But no longer any Pollyanna there. But if we don't change the corporations, we're not going to solve this problem.
No, there are millions of smallholder farmers, obviously, who depend on these kind of commodities and global value chains. And we're working hard. We work in cocoa, we work in coffee, although in coffee, I've gotten completely cynical. And we are now confronting some of these large corporations with the truth. And we'll see what that leads to.
But I'm seeing at the edges, entrepreneurs flip the whole economic model. And I'm seeing corporations that are more mid-sized, like Stumptown and others, actually do business in a different way.
What encourages me is that aside from the corporations themselves, you've got people who either come out of the corporations or have studied enough that they understand the demand side. Because a lot of development, as you know, has been oriented towards supply side.
Exactly.
More, okay? And now we have a whole group of people who understand that I got to find an outlet for these goods at the right price for the right people in the right way. And that, of course, that's why I was, I spent a couple of decades in business. So to me, thinking about demand side is natural. That's what you do. Is there a market for what I'm producing? Is there? And is there not? And is it a profitable market? And I think we have succeeded in mostly turning Heifer into a demand side development organization as opposed to a supply side.
Interesting. That's really interesting. And also, Pierre, you are connected to this next young generation.
Yeah.
And when I meet...
Not by age, I'm old.
Hey, look, I said connected to. No, but what's so exciting with Heifer and all the millions of young people around the world who have thought about giving a goat or something to a low-income community is there's the beginning of awareness. Because I get so many young people, and I'm talking 15, 16 years young, who say, I just want to know that I'm good. And I was like, what does that mean?
Yeah, yeah.
I want to know that I'm not doing bad things with the clothing that I'm wearing, with the meat that I'm eating, or whether I should eat meat. How many kids in the world now are going completely vegan? There's a level of awareness that is growing in this youngest generation And increasingly, these kids aren't going to buy, and they aren't going to work for companies that aren't more transparent and more sustainable. And we have tools now, so we can show consumers from whom they're buying, at what price, and what price those farmers are being paid. It's a longer game, but it gives me real excitement.
Yeah. In the coffee area, there's a little company called Heifer. I don't know if you ever heard of them. You have, okay. And I think their tool, their platform is absolutely superb in terms of identifying, and actually in the coffee business is particularly important, actually identifying explicitly what they're paying the farmers at the farm gate.
Exactly.
$2.34 for parchment coffee.
This is like Azahar in Latin America, and they're building Sustainable Buyer's Guide. Yeah. And that's why Acumen Academy, which we're building, is all about business models that are inclusive and sustainable, role models, and a new ethos. And that's why this idea of moral revolution that people think, well, is she being righteous, is just the opposite. It is that there is no single right set of beliefs or answer, but all of us, corporations, government, private sector, farmers, social entrepreneurs, consumers, all of us have to get more comfortable being uncomfortable. And I'm all in.
Yeah, I know you're all in. That's great. So we are too. And actually the whole fellows program that you have, we should connect with that. I don't know if you've got outlets and jobs for them all as they bounce out, but we could use with quite a few. So we can connect with that.
I think there are a lot of ways for us to partner. And like I said, I have huge admiration for the work of Heifer. I'm very excited for the direction, Pierre, that you are already taking and will go in. And we're all going to solve these problems together. So I'm just really grateful that you had me on.
Yeah, no, I'm so glad to have had you. So listen, based on that compliment, we will end our conversation. I will remind everybody that's listening that we have this Friday, we have Dan Glickman, who used to be USDA.
Great.
And I know Dan a little bit, and he's very interested in smallholder farmers in the US and overseas. And this is what we're working on, not as necessarily as a substitute for large industrial farms, but certainly as an add-on to provide flexibility and resilience. So, Jacqueline, thank you very much. There's a lot of questions that were asked. I'm sorry. I hope we've answered them in some way in the conversation we've just had. If not, maybe we can start over, Jacqueline, and do it again.
I love it. Well, Pierre, maybe your team could send me the questions so at least I can be thinking about them, because I always learn from the kinds of questions.
We will do that. Okay. Good. Take
care,
everybody.
Thanks to everyone for listening. So much appreciation.
Yes, absolutely. Be good. Enjoy the week.
You too. Bye-bye now.
Bye-bye, Jacqueline.